Today is Q&A Tuesday, and today's question is the 529 plan a good investment? Now, I've broken it down to talk about 4 points to help you make a better decision and figure out whether or not the 529 plan is in fact a good investment. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. So I'm going to talk about the 4 points in just a second, but before we do, let's give a quick overview of what the 529 plan is. So the 529 plan is a type of account. Now in this video, I'm going to talk about the savings plan, not the prepaid plan. While they're both 529 plans, we're going to focus on the savings plan just for this video. If you want to know more about the prepaid plan, put it in the comments down at the bottom and I will talk about it on future videos. But we're talking about the 529 savings plan. So the 529 savings plan is a type of account, not an actual investment, but the type of account. So it goes in after tax, gross tax deferred, and for planning for school. I was gonna say college, but it can also be used for K through 12 now. For school will come out tax-free. So it works a lot like the Roth IRA. Just for Roth IRAs works better for retirement, or works the same as the 529 plan for retirement as the 529 plan does for education planning. So it's gonna come out tax-free. So that's the big benefit. So you kind of have to let the investments cook inside the account to realize the real benefit of that tax deferral. So you take money from your paycheck that you've already been taxed on and you put it into the 529 plan. So you've already paid taxes on that. Now that money gets invested and hopefully it does really well and it grows. And then when you pull that money out, it's tax and penalty free if it's for education planning. So that is the big benefit of using the 529 plan. And obviously the other one is it's money that's set aside for education planning. So it's kind of like it's its own separate bucket. So psychologically or mentally, when you're thinking about it, you know that you have your money that you deal with on a daily basis. And then over here is your college planning account. So it kind of separates those two. Now let's jump into the 4 points that I've identified. So I'm going to go through the first two. And the first two that I have are kind of out of your control. Part of it's in your control, but these are kind of out of your control. The other two that I'll talk about, they're in your control and you can control them from the beginning so you can make the decisions to figure out whether or not the 529 plan is a good investment and whether or not it's going to work for you. But the first two that we're going to start with, the first one is going to be the time period. So the time period has to do with inflation of schools, regular inflation, and just general market performance. So when you take those variables, which are totally out of your control, that is going to affect whether or not the 529 plan ends up being a good plan. So if you invest into the stock market in any one particular year, you're kind of subject to market forces that are out of your control. So that's what I'm talking about with the time period. So somebody might have a really good experience because they invested when the market was doing really well. And on the flip side, if the market doesn't do very well, you're going to look at the returns and say, well, the 529 plan wasn't a good plan because the market didn't do well. Well, that's not necessarily true, but it's out of your control. So just realizing that there are market forces just in the stock market in general will help you understand that that has nothing to do with the 529 plan. That's the market performance. Now the investments, that's a different story. We're going to get into that in a minute, but the time period. So how the performance is each and every single year, and that factor of inflation or the cost of school going up is also a factor. So if schools don't inflate quite as much and your performance does really well, again, you're going to say the 529 plan was great. But again, there's nothing to do with the 529 plan, really. So the next one is the time frame. So we talked about the time period. Now let's talk about the time frame. That means how close you are to using those dollars. So if it's for college, we can use 18 years because typically that's what it is when you're saving into it. The 529 plan over that 18-year period, which is also out of your control. Now you can make that decision to start right away, but that time period, you can't control that because you have a start date, which at the earliest is going to be today, and you have an end date of when they're going to need that money for college. So that is the time period. So if you don't have enough of a time period, so let's say you started when your child was 10 or 12 years old, then you have less time to plan for it. And it also means that you should probably be more conservative because you are close to that goal. So again, that's kind of out of your control, but you need to understand that there's going to be less time for that money to grow and realize that tax deferral and a tax-free distribution. So you need to kind of let it cook in there for quite a few years to get the real benefit of the 529 plan. Because putting the money into the 529 plan to take it right out, that really doesn't do a whole lot of justice for you because you're just not going to get enough of a growth or enough performance out of that 529 plan. So again, it's one of those things that's out of your control, but what is in your control is you can start today. So you can't change what's in the past, but you can focus on the future, and that's exactly what you should do. So take something that's out of your control and put it within your control by starting a plan. Now, whether it's a 529 or any other plan, that's not the point of this video. I just want to give you the ammo so you can figure out which plan is right for you. So those are 2 points. Time period, time frame, kind of out of your control. So here's what's in your control. The plan investments. Now, why is that in your control? You can't choose which plans have what investments, but you can choose the plan. And this gets missed a lot. With the 529 plans, you can go to any state, any plan, and you can pick through their investments to figure out which plan you like the most, which one has the lowest fees, which one has the best performance, the most flexibility, the best support, whatever you want to look at. If you're looking at the plans, you can control that because you can look at which plans. Now, there are limiting factors. Not every plan has every investment, and you can't have every investment in every plan because that's just how 529 plans are designed. Well, we might agree to disagree on that rule that it should probably be open just like the Roth IRA is. Why it isn't, I don't know. But again, the investment performance is different from plan to plan. So to say that a 529 plan is good or bad would really be a false statement because you have to look at the actual investments. And what is nice is a lot of the fees have come down over the years and they've opened up to exchange traded funds and index funds, which have lower fees, a little bit more transparent. So you might like those investments better than the higher cost funds. But I'm not saying that mutual funds don't have low costs too, because they sometimes do have low cost funds, but the investments plan to plan are different. So in general, when you're saying whether or not the 529 is a good investment would probably be a false statement, but you have to back that up with the investment performance and what the actual plan has. Because there are some good plans. Not every plan is bad, but not every plan is good. So hopefully that doesn't confuse you, but it is in your control. So look a little deeper. Fees, investment performance, in your control. Look across all states. And that is for the plan investments. Now, the second part of the part that's in your control, so we'll call this part 4 of my 4 points. So part 4, this is the one that's in your control probably the most. And we talked about the investments inside the plan. Now you have to make those choices. And this is probably the hardest part of doing the 529 plan when you're choosing the actual investments. Now, it might make sense in your particular situation, or you might feel like it's the easy button where you just select your child's age and take one of those target date funds, but that might not be the best choice of funds because it really depends on your particular situation. It's not just the time frame, it's also how much you have saved and what the investment performance needs to do in order to achieve that goal. So it really comes down to the actual investments that you choose inside that plan. And again, that's in your control because you can go across all the different 529 plans in the 529 plan universe and figure out which plan is best for you and which one you like the most to give you the best opportunity. Because there's a lot of information out there that will rank these plans, and some of those rankings are good and some of them I think are false. I don't really know where they get them, especially when they have 2 plans that are almost identical with the same funds, but yet they say one plan is a gold rated or whatever 5-star rating that they want to give, and another plan they say is trash, but yet the investments are very, very similar, if not exactly the same. So you really have to look closely at these plans and figure out which one works best for you. And not every plan is created equal, so you really have to look closely. I'll give you one point about that. So I looked at the Florida plan in a previous video where they gave a matching $25 if you set up the account, and then another $25 if you set up a monthly contribution. So that was a free $50 per beneficiary per donor that you got right off the bat for opening up that kind of plan. And I know other plans do something similar if you're a resident of that state. So there's actually a lot more money out there on the table in 529 plans. Now, it shouldn't be and probably won't be the only funding source for your child's education or your education, whatever you're saving for. But there are benefits to look at if you can get those free dollars. Now, again, they don't always offer these incentive programs, so it always doesn't make sense. There's a blanket, this is right for everybody or this is wrong for everybody. So figuring out whether or not that 529 plan is a good investment really matters on your particular situation and what you're trying to achieve. And are there other investment options? What's your income level? Where you have needs-based financial aid? Are you going to fill out that FAFSA form? Are you going to get a scholarship? There's just so many variables. But don't think that a 529 plan as a blanket statement is a good or a bad investment. Look a little deeper, do your homework. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.